Hey guys, welcome back. In today's video, we are talking about AA's comments, the share count of AMC, 77 billion shares misreported, and many more in this video. Now, it's very important. So we have obviously the earnings of the market close today. And so it's very important to look at this message. Adam Aaron said, I encourage you all to read our press release and listen to our quarterly comments and this is for obviously today now, afternoon, AMC Entertainment announces our fourth quarter results. Candidly, there is a stunning amount of false information and opinion grounded neither in fact nor reality about AMC floating around X/Twitter. The law limits what, when, and how I can talk about AMC, but I'll have a lot to say about AMC today. And so I encourage everyone to obviously take a look, and of course I will be doing the same as well. And it's very important to note that the first bit of information you consume about the earnings, the fundamentals of AMC, should be directly from AMC themselves. Everyone will be, of course, making comments, including me, but you want to understand what is actually there. You want to understand the data, because a lot of things that you will consume when it's not just the data are obviously opinions, whether it's biased or not. And so it's very important to obviously take a look at what's happening. And some of the things to obviously note is that recently Cinemark have obviously made their earnings and we've seen how it's done. And one of the good things, I think one of the things that I will be looking out for is the comparison between the two. We know that the attendance for Cinemark has actually gone down. And so if the attendance for AMC were to go up, then you know that's an area where we are obviously taking advantage. But not only do we have to talk about that, it's about understanding that no matter what earnings we get, whether it's good or bad, we have to understand that the price itself are obviously not reflecting what's going on. Because we've seen how in the past, when AMC is having very good earnings and should have seen its price gone up, we've actually seen the price gone down. You can see multiple times, despite having good earnings, AMC's price has obviously gone down. And so we have to understand that there's a reason for this. Firstly, when we take a look at this, you can see AMC off exchange 66.82%. Now, one of the things we talked about and have always talked about is essentially understanding that we have not been able to see what the actual market sentiment for AMC is in terms of how investors will react when the price actually goes up. And the reason for that is because every bit of buy pressure has obviously been rooted into the dark pool. It hasn't hit the lit market, therefore it won't have an effect. So we won't know right now how people will react when AMC goes to $10, $20, $30 without seeing manipulation, without seeing suppression. We have never seen that happening. Every time we've seen AMC's price goes up, despite the fact that retail wants to continuously buy more, not sell their existing shares, we've only been faced with manipulation. And so we have to understand that despite what the earnings is today and then how the price reacts, is not a reflection of what I think the true market sentiment is. You can see 78% of all AMC trades off market into the dark pools today. Have a look at the price movement. Witness the laughable barcoding. They don't even try to hide it anymore. And so this is what we've talked about. And remember, AMC has obviously been a victim of extreme dark pool abuse, extreme spoofing, extreme synthetics, extreme naked shorts, extreme FTDs, the crypto tokens. All of these things have been used as tactics, as methods in order to attack the price of AMC. And so when we do see the earnings and we see what the post market is reacting or whether tomorrow's market is reacting, we have to obviously bear this in mind. It isn't to say that if AMC were to have bad earnings or good earnings and we see the price go down, it doesn't mean that all of it is suppression. But what we do have an understanding is that very likely a majority, 95% of that is, of course, the suppression is because they want to create the incentive to get people to sell their AMC shares. And you can see the only way I can understand what is going on is if you do what you promised. Look at AMC and GME failures to deliver. It's time for someone in power to uncover this fraud. Demand count of retail AMC and GME shares from all brokers. And so because of, something that I've been obviously emphasizing this video is about understanding how what we all see wouldn't reflect, what the investors actually think. And the big reason for that is because we don't know how many shares are actually out there now. We don't know how many times the float is obviously out there. And so whilst Elon Musk and Doge is obviously auditing into SEC, and if they discover the problems of course, what naked shorting is having an effect on the market, and of course, other factors as well, what we want them to do is obviously demand a share count. Once we can get the share count, once we can see truly what's happening, then we can really realize, in terms of the manipulation and suppression that it's happening. And again, then we will understand why, despite all these retail investors want to, of course, buy, why is the price never going up? Now, as always, none of this is a financial advice. I do tell you guys to go, so make sure to do your own due diligence and research. Now, take a look at this. And this is something you also have to bear in mind. And it's what we talked about with understanding why the price does not matter for AMC. And we should be focusing on the fundamentals. Because you can see here, another find that seems like a bad joke, but it's true. JP Morgan Securities inaccurately reported approximately 820,000 short interest positions involving approximately 77 billion shares. And it took FINRA 16 years to hand out this $3 million fine on tens of billions of shares. And so when we talk about in terms of the price of a stock, and especially when it's a stock that we know has a history of being heavily manipulated, you have to understand that there are firms out there who have inaccurately reported 77 billion shares. And so that's obviously a crazy amount. And we've seen how firms have obviously mismarked shorts as longs. We've seen how some brokers have reported that, they only have 500,000 of their shares, but, in actual fact, on their books, if said that they've shorted or lent out 3 million of these shares, or vice versa. They say they have 3 million shares, but actually they only maybe have 500,000 because they are obviously inflating these numbers. And so when we understand this, when we understand that this happens for both institutions, for brokers, we have to understand that the manipulation that we're seeing, the price that we are seeing, until we have a fair market, until we have, a full lit exchange showing price, what we are seeing here is obviously not true to extent, and it is very easily manipulated by these large institutions. And there's a big reason for why they're doing this, because when you take a look at the reverse repo, so we are at 76 billion. Now, it is higher than where we ended off last Friday, but you have to understand is we are, and we have been below the $100 billion mark. And that itself is showing something. That itself is indicating that the illiquidity issues is becoming, more and more apparent. And that's something that are obviously stressing and worrying these firms, because when you take a look at the stuff they've caught themselves into, Citigroup, the parent bank, company of Citibank, reported 65 billion in total credit exposure to commercial real estate. So one of the things that we talked about, and the reason why we talk about Citigroup, is firstly, when we understand why we're talking about Citigroup, it's because they are actually short sellers, or at least they owned or still does own synthetic shorts of AMC. We talked about the Brazilian ADR shares. So there are someone who obviously have an interest in terms of suppressing, or at least they want the price of AMC to go down. And they are, one of the people that are to blame for it. When we talked about the illiquidity issues here, when we talk about, the overall market collapsing, we've talked about the things that it's going to be at the very beginning, at what causes everything, is very likely to be the commercial real estate. So when we understand that a short seller of AMC, nonetheless a synthetic short seller of AMC, who owns over 65 billion in exposure to something that is likely to collapse and, just bankrupt this company, we understand where shorts are, and we understand exactly why they are worried, exactly why they're trying to suppress AMC more, and why they can't afford for the price of AMC to obviously go up. You can also see Barclays, UBS, and other European banks having liquidity issues. As much as $23 billion in outstanding risky debt could come due this year for European leader. Why isn't the financial media sounding alarm bells about these banks going to the US dollar market to sell almost $8 billion worth of bonds? And so what you don't see, what isn't talked about anymore as much right now, is obviously these banks, and UBS obviously being the highlight, because we know that they own swaps of AMC and GME. And so they are already showing signs that they aren't able to handle the liquidity issues right now. And so everything that we talked about in this video, you can see how it all comes to one thing. All short sellers of AMC right now are all showing weaknesses, are all showing problems that could easily go upside down. And that's why they are worried. Thanks guys for watching. I'll catch you guys next time.